Imagine a company that isn't just big, but omnipresent. A silent architect in the digital shadows, shaping markets, nations, and your very future. When the world economy stumbles, when markets crash, when the very fabric of our financial lives threatens to unravel, this entity is there, not just watching, but often picking up the pieces. We're told that no one entity could wield such power. Yet, BlackRock and its unseen brain, Aladdin, doesn't just manage assets. It manages risk. It manages mistakes. The world's mistakes. And in doing so, BlackRock has become something far more than an investment firm. It's become the central nervous system of global capital. The owner, by proxy, of almost everything. Our story begins not with a titan, but with a crisis. 1980s Wall Street, a landscape of leverage and high stakes. Larry Fink, a bond trader at First Boston, faced a catastrophic loss. A mortgage-backed security deal went sideways, costing his firm $100 million. Fink learned a hard lesson. Risk management wasn't just important, it was everything. He envisioned a new kind of financial company, one built not on speculation, but on an unprecedented understanding of risk. A system designed to predict failure, not just react to it. In 1988, BlackRock was born. Its core philosophy, data, technology, and a proprietary system later named Aladdin the Asset, Liability, and Debt Derivative Investment Network. Think of Aladdin as a supercomputer, not just crunching numbers, but mapping the entire global financial ecosystem. Every bond, every stock, every derivative and interconnected web. It tracks trillions of dollars in assets held by BlackRock and its clients. It identifies hidden exposures, potential defaults, and domino effects that could ripple across markets. This isn't just about managing BlackRock's money. It's about advising pension funds, sovereign wealth funds, insurance companies, and even rival asset managers. Aladdin processes 200 million trades a day. It simulates millions of scenarios, from geopolitical shocks to interest rate hikes. It asks, what if? Imagine a doctor with an MRI machine that could see every potential disease in your body and every possible interaction between them. Aladdin is that for the global economy. Today, Aladdin oversees an estimated $21 trillion in assets. That's more than the GDP of the United States. Its clients include companies like Apple and Microsoft, as well as major governments. This isn't direct ownership of every company. It's more insidious. It's the ownership of information, the ownership of the framework for understanding value and risk. BlackRock, through Aladdin, doesn't just manage money. It manages the very perception of money. It tells the world what is safe, what is risky, and what is valuable. It's a web, and BlackRock sits at its heart, privy to data that no other single entity possesses. They don't just react to market movements. They are increasingly able to influence them through the sheer volume of assets they manage and the data they command. This isn't about conspiracy. It's about the logical, almost inevitable outcome of unprecedented technological advantage within a capitalistic system. An eye seeing all, a brain processing everything, a silent hand guiding the flow of global capital. Then came 2008, the global financial crisis, a moment when the complex, interconnected web of finance became a tangled mess, threatening to pull the entire world down. Lehman Brothers collapsed, AIG teetered, banks were deemed too big to fail. The very definition of risk seemed to evaporate overnight. Governments and central banks were scrambling. They needed to understand the true extent of the damage. Who owned what toxic asset? What was the real value? In this moment of utter chaos, one name emerged as the unexpected savior, BlackRock, and its supercomputer, Aladdin. The Federal Reserve, the US Treasury, even the European Central Bank, they turned to BlackRock. They asked them to untangle the toxic assets that threatened to choke the global economy. BlackRock, with Aladdin, could analyze the vast, complex portfolios of failing banks and government entities. They could value mortgage-backed securities that no one else understood. They essentially became the world's forensic accountants. They shone a light into the darkest corners of the global balance sheet, identifying the bad loans and the true scale of the financial wounds. They advised governments on how to stabilize institutions. They became central to the bailout and restructuring efforts, not just in the US, but across Europe. This wasn't charity. This was a massive consolidation of power. In exchange for their expertise, BlackRock gained unparalleled insights into the global financial system. They saw everyone's hand. They knew the weak points, the exposures, the hidden risks of virtually every major financial player on the planet. After 2008, BlackRock didn't just survive. It thrived. It became indispensable. Its mistake fixing became its greatest asset. They had stepped into the breach, and in doing so, they cemented their role as the ultimate gatekeeper of global financial risk. The consequences of this consolidation are profound. BlackRock now manages more money than any other entity on Earth, roughly $10 trillion in assets under management. This isn't just institutional money. It's your money, your pension, your 401k, your insurance policy, all influenced by the decisions made within BlackRock. BlackRock is often a top shareholder in virtually every major public company. This gives them immense voting power in corporate boardrooms. They can influence corporate governance, executive pay, and even strategic direction. From climate policies to diversity initiatives, their voice carries weight. The line between BlackRock and government is often blurry. Key figures move through a revolving door between high-level government positions in BlackRock's executive suites. During the COVID-19 pandemic, the Federal Reserve again turned to BlackRock to manage the purchase of corporate bonds, injecting liquidity into the markets. This raises crucial questions about conflicts of interest. When the government seeks advice on markets, and the advisor is also the market's biggest player who truly benefits. The centralization of so much financial analysis and decision-making power under one roof creates a single point of failure. If Aladdin were to experience a major error, or if its algorithms were to misinterpret a market signal, the ripple effect could be catastrophic. Furthermore, the very definition of risk itself is increasingly shaped by BlackRock's models. This can lead to herd mentality where everyone acts on the same information. A system built to mitigate individual risk could, paradoxically, be creating a new kind of systemic risk where everyone is playing from the same playbook. The ownership of the world's mistakes isn't literal, it's informational. It's structural. It's the ultimate informational asymmetry. This phenomenon contributes to the growing wealth gap. Large established corporations often benefit from the stability BlackRock brings, while smaller, more dynamic ventures face higher barriers. BlackRock's influence extends beyond pure finance. Its focus on ESG initiatives, while potentially positive, also signifies a new level of corporate power. What happens when one entity holds such a detailed map of global capitalism? The growth of BlackRock and Aladdin is a story of technology meeting opportunity, of crisis forging power, and of data becoming the ultimate currency. It's not just a company, it's a foundational layer of the modern global economy. And it's still growing. From your local power grid to the company that sells you groceries, the subtle, pervasive influence of BlackRock continues to grow. It's a force that's too complex for most to grasp, too pervasive to ignore, and too powerful to challenge. The perceived stability of our current financial system is, in many ways, a testament to Aladdin's capabilities. But with each crisis averted, with each mistake identified, BlackRock's grasp on the reins of global finance tightens further. It's an ecosystem where one player has not just a better map, but often helps draw the map itself. This is the age of BlackRock, the company that owns, analyzes, and ultimately helps to shape the world's mistakes. And as long as financial complexities and crises persist, their role only seems destined to grow. The system they built to avoid their own mistakes has become the system that manages everyone else's. Their shadow extends across markets, policies, and even the very definition of capitalism itself. It is a testament to the power of information, analysis, and the strategic positioning forged in the crucible of global financial collapse. The silent architect, the ultimate risk manager, the owner of the world's mistakes. A single entity with an unparalleled view, shaping the future of finance, one data point at a time. And as the world becomes more complex, so too does BlackRock's role and the intelligence of Aladdin. Navigating the turbulent waters of global finance, BlackRock stands as both a stabilizer and, arguably, the ultimate centralizer of power. Your future, your savings, your economy. They're all connected to the silent giant, navigating the world's mistakes. The future of global finance, in many ways, runs through BlackRock's algorithms, its data, and its vision. This is BlackRock's world, and we are all living in it. The lesson is clear. In an increasingly complex world, information is not just power, it is the ultimate leverage. BlackRock, through Aladdin, has become the unseen hand that doesn't just guide markets, but redefines what a market even is. It is the company that, by owning the world's mistakes, now owns a significant part of its future. Do you believe BlackRock's immense power is a necessary stabilizer in an unstable world, or does it represent a dangerous concentration of control? Let me know in the comments below.